Okay, so I'm going to now show you a brief presentation about Rice Exchange um, to allow you to see some of the major benefits and so you understand some of the basic functionality on the platform. Rice Exchange is an integrated platform. What does that mean? That means that all the major elements that are required in order for the trade to occur and for the rice to be moved from a warehouse in one country to a warehouse in another country are handled on the platform, all in one place in a controlled and safe and secure manner. This has become really apparent in the last 12 months, where we've seen the impact of COVID-19 in terms of how it's changing the way that we are all conducting our daily lives, and it's especially had an impact on commodities, and even more so on food commodities. Why? Because in years gone by, we would have done most of our getting to know buyers and sellers at conferences. This was meant to be a physical conference, but now we're doing it virtually. And for many people, it's much more difficult to do that virtually. And so what we're providing is a trusted environment, a virtual environment where you can actually meet new buyers without having to do it face-to-face, because they've all gone through an extensive vetting process. You can trust that you can transact with them if you reach an agreement on all the basic terms. The other thing that is highlighted is the importance of food security. We see this throughout the world at a time when trade flows are disrupted. It becomes even more important for both buyers and for governments to guarantee the supply of rice, which is needed for their populace. And they're looking to technological solutions like ours in order to help them guarantee food security. One of the big aspects is integration. There are three major categories on the platform today, which are the shippers and logistic companies, the insurers and inspectors. We will also be adding finance capability in the next 2 months. What does it look like? So this is what you see when you're trading on the platform. You have a dashboard where you can see the trades that you are doing. You can see aggregate data about the trades that other people are doing. You can see where the demand is. You can see the prices. Then we have the ability to create your own trade requests. You can do this in a private manner, where only the other person who receives it will see it, or you can do it on the public exchange, where all the buyers are going to be able to see you making your offer. Once you, excuse me, once you reach an agreement with one of them, it goes straight to contract. So there's no doubt that an agreement was reached, and you already know that that what you agreed is what is actually going to be legally contracted. And then it goes into the settlement. Each of the steps of the movement of the rice and the related information from the inspection companies, from the shipping and logistics companies, are all tracked in real time on the platform. What does this mean? It means significant cost savings, and it allows you to spend less time doing administration work and more time either developing your business or improving the service and the quality of the rice that you can give to the buyers on our platform. I mentioned that Fujitsu is a key partner. They are one of the primary movers in DLT or blockchain technology. They've created a platform which in 4 months of operation has not been down for even a second. So that really gives you the trust and security to trade with the buyers on our platform in confidence, knowing that all of the documentation will be handled, and that your trade will go through to the end without problems. These are some of the key service providers. In each category, we have the #1 player in the world on our platform. We have the #1 player in container lines, the #1 player in vessels, the #1 shipping broker, and the #1 inspection company. I think a lot of you know it as Caleb Brett in the United States. In the rest of the world, it's Intertek. And we also have Catechna, which is in the US as well. This is how we got to where we are. It was a lot of work, I'll tell you. You don't produce a platform like this without significant amount of design. At each step of the process, we were consulting with our partners. We consulted with the inspection company. We consulted with the shipping lines, and to make sure that our platform was acceptable to them, and also that that we were taking the right steps to ensure the security of information, and did all the testing required before we actually went to launch. We're adding new users on the platform all the time. I said at the moment we have over 100 users, of whom 60 are active, and we're adding more all the time. Here's just some comments from some of our partners who've already used the platform, both buyers and sellers, and also the service providers. They're both impressed and happy because they're saving a lot of time and energy in terms of managing all the documentation associated with a RISE trade. We have a roadmap of additional functions which we're going to be adding over time, including land-based solutions, which may well be of interest to some of you. We will be introducing a solution which guarantees you payment, completely eliminating the payment risk. That will also be of interest. And then we have some examples of some of the data partners that we're going to bring into the platform. That's just to enhance your experience and allow you to be more profitable by getting the right analytics on all that data. This is why we're different from anybody else in the industry. I know there are some domestic marketplaces in the US allowing you to sell to buyers in the US, but there's no one not doing what we're doing, which is a truly international and global marketplace. And that's why we think this is the best way to help US rice producers increase their export capability and to get the best possible price. Finally, you see me on the left. I have a background in finance and investment banking. My co-founder Frank, who has been involved in the rice trade for 35 years, both as a broker and as a trader. He's the one who designed the platform. He designed it for himself and he designed it for you. And all of that experience is reflected in what he has designed and Fujitsu have built. And I would invite all of you to have a demo. I'd also invite you to talk to either me, Frank, or Jeanette about how we can help you to better access the buyers on the platform. Jeanette will be able to give you some more detail on exactly who is there, and give you a better idea on how we can help you make the complete end-to-end solution that our platform allows. Thank you very much.
Welcome. My name is Milo Hamilton. I am the senior economist and owner of an advisory service on rice position in the United States called First Grain. I want to share some slides with you and talk a little bit about the rice market from the world perspective. I've talked at this conference with another person about the US market in particular. Now I want to focus in on the world sector, and I'm following up on Stephen's talk, which is from the Rice Exchange. and very interesting talk. And he's more into ocean, seaborne commerce. Okay, so you've heard Stephen's talk, and now you're going to hear my talk. And I'm talking on the world rice with an emphasis upon Asia rather than the Americas, which is a small player in the world market, though very big to US rice farmers, of course. There are 3 initiatives underway in rice trading in 2021 that fascinate me. One is Indigo Ag, which is a digital market platform, related services for rice buyer and seller. And I do that with Win Coleman at another point in the program. Then there's the CME group that has a new Thai 5% rice futures contract with cash settlement based on Platts Live Rice Index, which will be centrally cleared by the CME clearinghouse, virtually eliminating counterparty risk. And I will be doing, I did a seminar on that in January, or will do one since it's the 9th of January now. And this will be shown a month later, and then again in March, I will come back with the exchange in London and look at the development of this contract, just getting off the ground. And then there's the rice exchange, which Stephen has amply presented and on the front end of my talk. I love all the new ways of buying and selling rice on an iPhone. That's where the world is headed, and it's digital. Enough said. Okay, so like the name of my company is First Grain, and a lot has been happening in the world of rice globally and in the US. We had COVID scares in the spring and a lack of transportation, and as a consequence, the prices went very high in April. And now with harvest, they're going back up again. What the devil is going on? Well, the name First Grain comes from a Chinese proverb that says, more precious than pearls and jade are the 5 grains of which rice is first. In China, rice is the #1 grain. They said 70% of their irrigation on rice and a number of other things they do with rice. It's very precious to them. If there is a crop failure, a famine, or a war, people start to get hungry and die of famine, of hunger. And if you had a child that was hungry, you would sell your family jewels to buy him some rice. The good Lord makes the rice, but we sell it. And when it's taken away by weather or war or both, we got a problem. And already now in the US, we've got cars lining up to get a square meal a day. Who would have thought this would happen? Things are happening that have never happened before. As I said, our rice world is being thrown upside down along with a lot of other stuff. One of the positive things for a farmer seller is that this means more volatility going into 2021. Volatility can be down or it can be up. I asked the question as to whether the ground rules are changing for the global rice market. And here's what I want to cover in this short section. 2,000-year trend in Asia versus the West in terms of global GDP. You might be astounded at what I'm about to present to you there. COVID-19 disruptions in infection, in transportation costs, particularly containerization, and related events. The US dollar, which is related to COVID, because we've produced a lot of dollars in the last 12 months in the United States. Asian rainfall patterns, China and India, and of course the Americas, which is the backyard for the US market, but not for the rest of the world. From the birth of Christ to the current time, we have had 2 trends. One trend was for the increase in the European, US, and former Soviet Union share of market, and the diminishing of the influence of India and China up until 1950 at the end of World War II. After that, we saw a remarkable shift, and China began to expand, and India and Japan are expanding. And I believe that India is going to go back to something very similar to what it had back in here. Oops. Back in this period, sorry. And so I think India will increase. I think India is going to increase here, but already we have gone from China, India, and Japan being about 20% of the world GDP growth to about 50%. India may start impinging upon China. Um, what you're seeing happening in this chart is that Western's part of the total GDP, or gross domestic product, had been going up until 1950, and Asia had been declining. Now, since 1950, it's the opposite. Asia's been grabbing more of the growth of GDP, and it's at the expense of Europe, Russia, and the US. And it's a trend that's still continuing, I would maintain. And the interesting part is that these three powerhouses in Asia, China, India, and Japan, spend a lot of attention on rice and a lot of money to subsidize rice farmers. I'm not sure they're doing the right thing, but that's what they do. They have money and they spend it on rice. And they eat a lot of rice and they love rice. If you look at the United States over the last 80 years, from 1800 to 1880, the GDP in the US tripled. China did the same thing, but did it in half the time, 41 years, tripling between 1969 and 2010. And now India's come on the scene, and my hunch is they will do the same thing. They will grab part of China and part of the rest of the world's share of global growth. This is not bad, this is good. You want everyone around the world to be wealthy and getting more wealthy because it makes more opportunities for rice businesses to be selling to people that have money. Here's the problem. The COVID reaction in Russia, European Union, the United States has been very slow to get to the deal and get the job done. You look at India, China, and Japan, if you can believe the numbers, and COVID has had a very low impact in these areas. It's had a very high impact here, and one can describe why that's the case in these three regions, but it is the case. I believe that that Asian economies will grab more and more market share in the next year or two because of this, and United States, European Union, and Russia will be set back somewhat. But it's just a trend change of the Asia. It's the 21st century is the age of Asia. It is the age of the Asian time frame, and China will be the largest economy within 5 years, depending upon what the dollar's worth. If the dollar goes down, China becomes larger and larger monetarily in the process. What has happened is that over the last 12 months, we have printed in the US all of the dollars ever printed, so that we have a huge increase in the supply of paper dollars. Normally that's associated with steady to weaker currency. And as you can see, as the printing has gone up, we have had weakness in the dollar. This is not reversible quickly. So the dollar is trapped in a kind of situation that's not very pleasant, except for if you're exporting grain. It's a good thing for exporting grain. The Shanghai Container Index keeps shooting up. It hasn't slowed down. And this increases the cost of moving rice out of Asia into other markets. It's just a cost of doing business, but it's you can see it's doubled, more than doubled, and it's still going up, the container rate. If you look at the relationship between the dollar and overall agricultural crop and row crops here, as identified by the Deutsche Bank Agricultural Index, it has been in downtrend since 2008, and it is still going down now, but we are of the opinion that this market is about to break through this downtrend and move higher as the dollar moves lower. The same thing that's happened over here, where the dollar was cheap and ag prices were pretty high. The dollar got strong and ag prices are pretty low. So we shall see whether this prediction happens or not. But you can look at what I call the rice currencies. And so the dollar goes down and the Chinese yuan goes up, and the Vietnamese dong, sort of tied to the dollar but slowly depreciating over time, has stabilized. And the Thai baht is at the highest levels in 5 years. That's a major competitor to the US and is the market that will be used for the CME contract for futures in Asia, the Thai 5%. India and Pakistan have been merrily depreciating their currencies, but they may not be able to continue to do that. And the Brazilian real looks like it may have bottomed out as well, which is good news for American rice and soybean farmers. It's not clear that this is going to happen, but if you look at the Southeast Asian economies, they benefited from the trade war because a lot of manufacturing has moved out of China into those countries, and their currency should be a lot stronger than it actually is right now. And now with the dollar going down, you might see these currencies going up, which means they're not as competitive on their export offer as they've been for the last 5 years. They've thrown everything but the kitchen sink at the US rice price over the last 5 to 10 years. Interestingly enough, the market in Asia, this is Thailand, Vietnam, Pakistan, and India, are all going up and are back to the kind of levels we saw, almost a decade ago. And it's going up. And yet the fundamentals that the international organizations, USDA and FAO, say, we've got a larger crop, China's got larger production, everything's hunky-dory. Well, it's not so hunky-dory. If you look at the market in the Americas, the Thai, these are global comparisons. The Thai price is going up, the Viet price is going up, the Indian price actually is going up, and the Paki price is going up, and the Uruguay price is very high, and the Brazil price is very high. So over the 5-year average, Thailand's high, Vietnam's high, Pakistan is high, India's low but coming up, and the Americas are really high to the Thai price. Why do I make this comparison? Because I believe within the next year, the Thai 5% will trade forward market similar to Chicago. If you look at Chicago versus these 5% markets out in Asia, it's been dead in the water, but the other markets have been going up. If you look at everything relative to Thailand, if you understand US basis, maybe you can understand this. The basis is the difference between the cash price and the futures price. Normally, basis and the delta trades at a discount to Chicago. And if you recalibrate it to a 5% Thai price, which I've done here, then you have a seasonality of the spreads. Paki is very weak to Thai prices right now. And in terms of its 5-year average, little dotted line, it is very weak. And Vietnam's is very high to the Thai price and the 5-year average. And the Brazil price is extremely high to its 5-year average relative to Thailand. India is very low and has a long way to go to get even back to the average. And if you look at US futures, paddy futures versus Thai milk prices in metric tons, pardon me, it runs between negative $100 and negative $250. If you look at the US milled export offer versus Thailand, we're very cheap. We're back to the lowest levels in several years. And the market has been stable up until last year and this year, where it's become very volatile. Okay, very volatile. Let's peel out the chart of US rough rice futures versus Thai mill. I'm not saying anybody trade it, but it does have a pattern normally, other than the last 2 years where it's been very volatile. It basically trades at about 130 to $150 discount to Thailand. Right now, I would be buying US rice futures and selling the Thai market if it becomes a market we can trade soon. And watch it come in. People will do that probably for speculative reasons or other reasons, but any way you look at the US rice price, domestic or foreign, and my other speech on the US market also shows that. It's very cheap. Now let's back off and look at stocks. What you've got here is stocks in the total world going up since 2005, and in China going up, pushing this stocks up. The rest of the world stocks are going down. In India, they're going up, but an awful lot of India's rice gets flushed out as exports. 13, 14, 15 million metric tons now is the new level. And one of the reasons why the India and China are making a play on the world market is because since 2005, we have had very good weather, very good general rainfall patterns since 2005. So it's resulted in 2005 with production going way above consumption. And when production is way above consumption, either you build stocks or you export it. India's decision is to export it, but in other areas, that's not necessarily the case. So in China, they're just piling the stocks up right now. China's about balance between export and import. But you look back at this period here, prior to 2005, things were very dicey and variable, and the weather had a huge impact on production in India and to some extent in China, with rainfall patterns way below the average. And this is a phenomenon of nature. It goes in one direction for a period of time and then it reverses. At some point, it will stop being so rainy. And when it does, then we will get back into a situation like this. The rainfall in China is double normal, and yet they claim their crop is larger. I find it very hard to accept that, but that's what we've got here. And so variable rainfall, very dicey trade in stocks, good rainfall, very obvious surplus buildup. This is Chindia, this is China and India together. So China is building the stocks and India is doing the exporting. But between the two of them, they pretty much own and impact the world market. Someone said once, when elephants fight, it's the grass that gets stompled. So the rest of the world is the grass, and India and Thailand, India and China are the elephants of rice. Have you eaten your rice today? That's the way people greet one another in China. China's a life food over there. China should hold its rice bowl firmly in its hands. That's from Mao to the current time. They want to be totally in control of the rice market. Rice dilemma and challenges ahead. 60% of the world's rice is in China stocks. No one trusts their rice stock statistics. China uses 3 times as much chemicals per hectare as in the US, and 5 times as much pesticides as in the US. China suffers from toxic soils, low soil fertility, that's why they have this problem here, and sinking water aquifers. So is India. Both of them have problems with their aquifers. 70% of irrigated water is used in rice. China ships its hydrocarbons from the Middle East, a 5,000-mile journey by sea. If the cost of hydrocarbons go up and the oil's been a little strong, they're going to have big problems, and particularly if the dollar gets weak, being competitive in the world rice market. Higher field yields, which they always are touting about, do very little to solve four of the above issues in China. Okay, so they just say we'll grow more rice per acre and everything will be okay, but that's not the case. Let's turn to India. This farmer's happy. He must be up in the north. India needs a free trade agreement with itself. Very different problems in India than in China. Alan Mustard was the agricultural counselor there. Truer words were never said, in my opinion. This is one of the great statements about India. India's dilemma right now is that farmers fear the new 3 laws will shut down farmers' regulated wholesale prices they depend upon. India has uneven geographical distribution of rice farm policies, but the Food Corporation of India has a debt now of 52 billion because it buys food grains at very high prices and then stores them at a loss and then tries to resell them either to locals or in the world market. And so what we have is a situation where the rice support was up by 73% in the last 10 years. In the northern provinces of Haryana and Punjab, which are big producers, the price is 35% higher than in the south, like in Bihar. And Modi, the premier, has done this deliberately and has gotten 3 laws passed during the COVID when people were looking at other things. It allows farmers to sell produce anywhere. You can do that in the US, but not between the states in India. It sets a framework for contract farming, voluntary and mutually beneficial. Allows produce to move between states and removes stock limits on rice traders, so the big guys can get involved in the Indian grain market. This is just motherhood and apple pie in the U.S. and South America and and Europe, but in India, it's a brand new thing. Remember, all these states compete with one another, and the trade is very abrupt and uneven. The solution for India's market problem is to let market prices tell farmers what to grow and where. If they do, there will be a cut in non-basmati exports, which is like 8 to 10 million metric tons, and it would lower rice exports out of there. Fund the expanded oilseed production and lower imports. They have a huge deficit in oilseed, yet they keep expanding their production of wheat and rice. And in the case of wheat, they don't export it, but in the case of rice, they export it and cause a lot of misery to other countries, okay? Ordinary rice exports shift then towards Southeast Asia and the Americas, which are the other big areas that can export rice, okay? Now this lies in the future and depends upon whether these 3 farm laws are put into practice or rescinded. If you look at the US, prices there are moving up. I think we're down to very low level for milled and rough prices in the US. Let's look at the Americas now, which is a footnote to world trade, but very important to export potential from the Gulf Coast of the United States. In terms of rice, the bean price is very high and the rice price is very low. And when it goes below 56%, which is the 5-year average, moving into January, if it stays at this level, we should get a severe cutback in rice plantings this spring in the United States. Now, Brazil plans to export 1 million metric tons. The problem with that is that tabulating some of the forecasts, we don't know yet, we'll know at the end of January, that whole area could be down 800 to 1 million metric tons. So if Brazil decides to export rice, they will do like robbing Peter to pay Paul. It'll be from one part of the year to another, and they'll come out net even or negative like they did this year. The price went way up, and it went way up to $18.30 from $10 because they ran out of freaking rice. They had to buy it from the US. The unknown is Brazil. Brazil is the big market down there. It is the biggest market of all of the markets down there. All the rest go largely for export. If Brazil's down 10%, you can forget about the others. Okay, what's happened here is that exports from South America had been climbing up until about 2010, this period here, and then it went sideways. The reason it went sideways is because there's no money in growing rice outside of the domestic markets. So it really went from a powerhouse of exports to a stable, stale market. And if our production ideas are correct, you're going to see a large drop in exports this year and much firmer prices out of South America. It still has to be seen. We don't know if that's going to happen or not. But the price in the US price is $3 a hundredweight lower than Brazil already, still here on the 9th of January. This is a technical thing, but it looked as though the market has broken out from a downtrend, but it really hasn't. I am still bearish on the market technically, not fundamentally, but I think technically I'm bearish because this is the spot contract, and that was a run up on the July futures. But if you take that out and look at a third position forward, which now would be July, I guess, for the 2021 crop, the market has been unable to get above $13. If it breaks through here, it will happen not because of conditions in the US, where we still have a large crop to market and Iraq is not bought yet. It will be outside events, like the price of rice in Asia going upward above the Gulf price right now, and then we won't stay down there. And the Brazil problems and Bangladesh buying maybe 2 million tons from India, Nigeria opening its borders. And all in all, we've turned from a bearish situation, and we're watching China closely because they say their crop is larger, but it may not be the case. So the market will go up or down, and it's a question mark as to which will happen. My hunch is it's going to go higher, not because of the situation in the US, but the situation elsewhere. So let's sum it up for Asia and the rice market. China and India have massive rice stocks. India has stocks, but they're being flushed out through export. China just keeps piling it up. India's seasonal at a low now. It still is below its average, 5-year average. Demand subdued by rising container costs. China claims to have a bigger crop in 2020, although its growing season was the worst in decades. Go figure. African demand strong. Nigeria's opened its borders. Wouldn't do that unless it had to buy more rice. Weather issues, floods in China, floods in South Korea, where they're auctioning off 370,000 metric tons of rice, and drought in Thailand and drought in South America. It's not a nice year for rice. New farm laws will lead to less rice production in India, perhaps. In any case, Vietnam, Thai, India, and Paki prices are rising as we speak. More import buying from China in 2021, who knows? They bought 100,000 tons the first time in decades. Vietnam's also buying from India for the first time, perhaps ever. High prices in the Americas in 2021, not sure. Weak dollar makes for US prices cheaper, and the price can be higher at the Gulf. There's a lot of reasons to be bullish on the price of rice, and most of the reasons are technical and have to do with what countries claim they have, but are not necessarily showing that. We have a weekly report called the Rice Market Strategist. I would love to send you a copy if you just let me know. And we have just published our annual outlook piece, and I can send you a copy of that if you want it. Just call either of these two numbers or email us, and we will get you a copy of our annual report. And we appreciate your time and patience. Sorry.